Last month, a pensioner lost weeks of payments simply because of one mistake that took less than a minute to prevent. Another nearly handed their entire pension to scammers after receiving what looked like a genuine call. These aren't rare stories, they're happening every day. In this video, I'll reveal the biggest state pension mistakes people make, and more importantly, how to make sure you never become one of them. Before we move on, if you're serious about protecting your money and staying ahead of important financial changes, make sure you subscribe. Every week I share simple, practical advice to help you avoid costly mistakes, spot scams before they happen, and make sure you never miss out on money you're entitled to. If that's valuable to you, hit the subscribe button and let's keep going. If you get your state pension paid into a bank account, please stick with me for the next few minutes, because this could genuinely save you money, save you stress, or stop you losing cash to a scammer. I'm not here to frighten you for the sake of it. I'm here to give you the real, up-to-date facts that a lot of people simply don't know, and that a lot of other videos won't tell you properly. Let's start with the biggest one, because it catches out more people than you'd think. Reaching state pension age does not mean the money just starts landing in your account automatically. A lot of people assume that once they hit their pension age, the payments simply begin. They don't. You have to actually claim your state pension. The Department for Work and Pensions, the DWP, will usually write to you about 2 months before you reach state pension age, explaining what to do next. But letters get missed, they get lost in a pile of post, or they go to an old address if you've moved and forgotten to update your details. If you don't claim, you don't get paid. It's as simple as that. And here's the bit that really matters. If you miss claiming it, you are not automatically topped up or backdated in every case, so delays can genuinely cost you real money week after week. For some people, that's over £200 a week they could be missing out on if they've got a full national insurance record. Over a month, that adds up to serious money. So if you or a parent, a neighbour or a relative are approaching state pension age, the very first thing to check is whether the claim has actually been made. Don't assume it's sorted just because a letter arrived at some point. The easiest way to check where you stand is the government's own online state pension forecast service. It's completely free, it takes a few minutes, and it tells you 3 important things. First, roughly how much state pension you're on track to get. Second, your actual state pension age, which might be later than you think if you were born from the 1950s onward, because the age has been rising. And third, whether there's anything you could still do to increase what you'll receive, such as filling gaps in your national insurance record. I genuinely recommend anyone in their 50s or 60s sits down and checks this, even if they think everything is fine. It takes 10 minutes and it removes any doubt. Now let's talk about how and when the money actually lands, because this trips people up too, especially around bank holidays and the end of the tax year. Your state pension is paid every 4 weeks in arrears, meaning you're paid for the 4 weeks that have already passed, not the 4 weeks ahead. Which day of the week you get paid on depends on the last 2 digits of your national insurance number. It's not random, and it doesn't change from payment to payment. So once you know your day, that's your day going forward. Where it gets a little messier is around bank holidays, and especially in the run-up to a new tax year in April. If your normal payment day falls on a bank holiday, banks often move the payment to land earlier, not later. Most people are used to that. But sometimes there can be short delays or knock-on effects from processing changes, especially when new tax year rates are being brought in. So here's the simple, sensible thing to do around any bank holiday period or around early April when rates change. If your pension is due, don't just assume it's landed and go about your day. Take 2 minutes to actually check your bank balance or your banking app. If you've got direct debit set up for rent, council tax, energy bills, or your phone, a payment landing even a few hours late can be enough to bounce a direct debit. And that can trigger a late fee or even affect your credit record. It's happened to real people. A payment that was only delayed by a few hours turned into 3 days of stress, a bounced rent payment, and a late fee letter, all because nobody double-checked. The money wasn't lost, It just moved later than expected, but the stress and the knock-on charges were completely real. So my advice here is simple. On your usual pension payday, especially if it falls near a bank holiday or near the start of April, get into the habit of checking your account. Think of it like taking a daily tablet. It only takes a moment, but it can save you days of hassle if something has shifted. Now, moving on to something far more serious, and this is really the heart of why I wanted to make this video. Scams targeting pensioners around their state pension and their bank details are absolutely rife right now, and they are getting more convincing, not less. If you get one thing from this video, let it be this next part. The DWP, HMRC, and your bank will never call you out of the blue and ask you to confirm your full bank account details, your PIN, or a one-time passcode that's just been texted to your phone. They will never ask you to move your state pension into a so-called safe account because your current one has supposedly been compromised. They will never ask you to buy gift cards to pay a fine or a fee. Any call, text, or email that does any of these things is a scam. Full stop, no matter how official it sounds, no matter how much the caller seems to know about you already, and no matter how urgent they make it sound. Scammers have got very good at creating urgency because urgency stops people thinking clearly. They might say, your pension payment has been flagged, or there's a problem with your national insurance number, or your account is about to be frozen unless you act right now. The pressure is the tactic. A genuine organization dealing with your pension will never demand an instant decision over the phone, and they will never mind you hanging up and calling them back on a number you've looked up yourself. So here's a simple rule that works every single time. If someone calls you claiming to be from the DWP, your bank, or HMRC, and they ask for any personal details, banking information, codes, or passwords, hang up. Then look up the official number yourself, either from a genuine letter you've received before or from the official gov.uk website, and call that number directly to check if anything is actually wrong. 9 times out of 10, there will be nothing wrong at all, because the original call was fake. It's also worth mentioning that scammers don't just phone. They text, they email, and they even send letters that look official, sometimes with real-looking logos and reference numbers. Just because something looks professional does not mean it's genuine. If an email or text asks you to click a link and log in to check your pension or your bank details, don't click it. Go directly to the website yourself by typing it in rather than clicking through, and check from there instead. If you ever do get caught out, or even if you're just not sure and want a second opinion, don't be embarrassed to ask someone you trust, or to contact your bank directly using the number on the back of your card. Banks are used to dealing with this every day, and they would always rather you called to check than lost money staying quiet out of embarrassment. There is no shame in double-checking. The people who fall for these scams are not careless or silly. They are simply targeted by people who do this full-time and who are very good at sounding convincing. Let's talk for a moment about people who don't use a mainstream bank account or who prefer not to. If you're one of the people who still gets your pension paid another way, perhaps through a post office card account, you should know that these accounts have been phased out over recent years in favor of standard bank, building society, or credit union accounts. If you're still relying on an older payment method, it's worth checking with the DWP or the pension service that your payment details are current, because using an account that's no longer supported can lead to real payment problems and delays. There's also a payment exception service available for the small number of people who genuinely can't use a mainstream bank account, so nobody should be left without a way to receive their pension. If in doubt, contact the pension service directly and ask them to confirm exactly how your payments are set up. Now, another area worth being aware of relates to means-tested benefits and other support linked to your income. Some pensioners are entitled to extra help, such as pension credit, help with council tax or other support, but many simply don't claim it because they don't realize they're eligible or they assume their income is too high. It's estimated that a significant amount of pension credit goes unclaimed every year. money that people were entitled to but never applied for. If you're on a low income in retirement, it's worth checking your eligibility because pension credit can also act as a gateway to other help, like reduced council tax, free TV licenses for some age groups, and help with heating costs in winter. Again, this is something you can check for free through official government channels, and it's worth doing even if you assume you won't qualify, because the criteria are sometimes more generous than people expect. If you're someone who has moved abroad or is thinking about retiring overseas, there's something specific worth knowing too. Your state pension can usually still be paid to you if you live abroad, but the rules around yearly increases change depending on where you live. In some countries, your pension keeps rising each year in line with the normal increases. In others, it can be frozen at the rate it was first paid, or the rate at the point you moved, meaning it doesn't keep pace with inflation over time. If you're planning a move abroad in retirement, it's worth checking specifically how your destination country is treated, because this can make a real difference to your income over the years, and it's not something that gets reversed easily once you've moved. Let's bring this back to practical, simple steps, because that's really what matters most from everything we've covered. First, if you or someone you know is approaching state pension age, check that the claim has actually been made. Don't assume it happens automatically. Second, use the free online forecast tool to check what you're due and confirm your actual pension age. Third, get into the habit of checking your bank account on your usual payment day, particularly around bank holidays and early April when rates change, just to make sure everything has landed as expected. Fourth, and most importantly, treat any unexpected call, text, or email asking for your bank details, PIN, or passcodes as a scam. Hang up and check independently using a number you trust. Fifth, if you're on a lower income, check whether you're entitled to pension credit or other support you might not be claiming. And finally, if you're moving abroad, check how your pension will be treated in your new country before you make the move. None of this is complicated once you know it, and none of it should make you anxious every single day. The point isn't to worry constantly about your pension, it's to know the handful of moments where a quick check protects you, whether that's claiming on time, spotting a payment that's landed differently than expected, or recognizing a scam call before it costs you anything. A little bit of knowledge here genuinely goes a long way, and sharing it with a parent, a grandparent, or a neighbor who relies on their state pension could make a real difference to them too. If you found this useful, the best thing you can do is pass it on to someone who needs to hear it, because a lot of pensioners simply haven't been told any of this clearly. And it's exactly the kind of thing that protects people quietly before anything ever goes wrong.